Yes, good morning, everyone. I hope that my screen is visible to all.
Yes, sir. Good.
Good morning. Thank you. Yes, so during our last two, three lectures, we had discussed the recent and very important cases which were related to corporate governance. Now we will start with our first unit, that is introduction of corporate governance. So first, I'll just read what the definition of corporate governance is, and then we will discuss that definition. So the term corporate governance includes the structure, system, and process a corporation uses to communicate authority, responsibility, and accountability among the stakeholders. Now, this is very important, and the last line is very important. That is responsibility. That is to communicate authority, responsibility, and accountability among the stakeholders. Generally, everyone talks about authority, that I should have this much of authority. And people normally ignore their responsibility. And when we talk about accountability, it is very much neglected or ignored. But corporate governance is a system which fixes not only the authority, it also fixes the responsibility, and it also fixes the accountability. That in case if the stakeholders are at loss, who is the person who should be held responsible for that loss, or who is the person who can be held accountable for that particular loss? So that is very important, because in every organization there is a hierarchy. But when we talk about corporate governance, it is not only restricted to hierarchy in the organization, that who will be reporting to who, but it also believes in responsibility and accountability. That in case if anything goes wrong, who should take the responsibility, or who is the person who can be held accountable for that? It should not happen that the person is one person is accusing the other, that because of this person the loss has occurred to the organization. There is a very important phrase, passing the buck. Passing the buck means that no one wants to take the responsibility, everyone wants to share or transfer the responsibility to the other person. In case of loss, no, it was not my fault, it was the fault of the other department. The other department will say, no, no, it was not my fault, because of the functioning of some other department or some other official, the loss has occurred to the organization. So that is when we are not accepting our responsibility or accountability or our fault. So in this case, when we talk about corporate governance, in advance everything is fixed, that who is the person who is responsible for these decisions. If these decisions are good for the organization, okay, that he is the person responsible. But if these decisions which are taken by the general manager of the organization or board of the organization or CEO of the organization, if they do not go as per the desired projection of the management, and because of these decisions, if any loss happens to the organization, CEO or general manager or the board who has taken the decision should be held responsible for that, and action should be taken against that person. So that is the concept of corporate governance. So it not only restrict itself to the hierarchy in the organization, but it also tries to fix the responsibility and accountability in the organization. That in case of loss, who is the person who should be held responsible or who should be held accountable for that particular loss. So that was the first part of the definition. Second, good corporate governance is one which balances the interest of various stakeholders, namely company employees, government, suppliers, owners, customers, to ensure the long-term sustainability and success of a corporate venture. So the most important thing to be included in corporate governance is transparency, transparent system. Everything in the organization should be transparent. No deal should be conducted below the table. So everything should be in writing. Everything should be as per the law. Everything should be transparent and should be known to all the stakeholders in the organization. Then only we can say that the organization will grow in the long run. Because if the organization is attempting shortcuts to achieve success for some time, for a short while, it can be successful. But if we talk about in the long run, the organization is not going to sustain if the organization is not implementing good corporate governance practices. That means the system of the organization, if it is not transparent, then things will not be good for the organization in the long run. We have seen in various cases how, in those cases, the organization suffered because of lack of transparent system. In Satyam, for around 5 to 6 years, they cheated the stakeholders. They manipulated their balance sheets, the figures of the balance sheet. They manipulated the profit. And because of that manipulation, the company was able to generate or raise capital for a period of 3, 4, 5 years. So for a short term, the company was profitable. But what happened to the company in the long term, we all know that in the long term, the company has to close down. The company was purchased by some other company, and now there is no name of Satyam Computer. So in the long run, if the system is not transparent, then the organization is not going to be successful if we are talking about in the long run. Now, corporate governance in India. Am I audible to all?
Yes, sir.
Yes, sir.
Okay, thank you. बीच बीच में ऐसा यस सर बोलते रहो, तो मुझे लगता है कि कहीं मैं अकेला ही तो नहीं बोल रहा, अचानक से नेटवर्क चला गया, कुछ हो गया तो मुझे पता भी नहीं चलेगा. ठीक है. ओके. सो कॉर्पोरेट गवर्नेंस इन इंडिया. It is a set of internal controls, policy, and procedures which form the framework of company's operation, and it's dealing with various stakeholders such as customers, management, employees, government, and industry bodies. So when we were discussing various cases that time, we had discussed why it was important in India to have certain written down rules regarding corporate governance. Why it was necessary for the government to impose guidelines on the industries. why it was not so that all the industrialists on their own, they are keeping their system, the entire system of the organization is so transparent that government should never think of coming up with a law related to corporate governance. So in India, we all know that although we have the bulkiest, the longest written constitution of the world or written law of the world, but still when it comes to following that law or implementation of that law, there are certain problems or certain loopholes are there or certain hesitations are there. And because of that, we often see that people do not follow the rules. It is same for the general public. It is the same for the industrialists or businessmen who are running the companies. So it was necessary for the government that it should introduce certain rules and regulations which are to be followed, which is obligatory, which is compulsory, which is statutory to be followed by all the organizations. If not followed, strict action or penalty can be imposed on that particular organization. And for that, SEBI has been constituted. We all know what is the meaning of SEBI. So the role and responsibility of SEBI is to check whether everything is going as per the rules and regulations or not. If not, then serious action can be taken against that particular company. Then we had in the Kingfisher Airlines, we had discussed the various bodies formed to implement these rules of corporate governance. That is, Enforcement Directorate is there. Then the Debt Recovery Tribunal is there. So all these bodies, these are created by the government to protect the interest of the stakeholders. And in that stakeholder, the foremost importance is given to the shareholders of the company. We have seen that which people are called as stakeholders, who are the stakeholders in the company. But the most important protection which is given in these rules is related to the protection of the common shareholder, the small shareholders, how these shareholders can be protected. Because in the year 1992, when the Harshad Mehta scam or security scam was out, then the most suffered lot was the common or the small shareholders who lost their entire earning. And there, the government decided that we should have some rules and regulations, or we should come up with certain acts which are to be followed by the organizations to protect the interest of the shareholders. That we are going to discuss in our coming lectures also, that how the interest of the small shareholders is protected. Then next part, good corporate governance is one which balances the interest of various stakeholders, namely the company, employees, government, suppliers, customers, owners. So good corporate governance practice, very simple. Good corporate governance system is a system which balances between the stakeholders and the organization, organization and the government agencies, organization and the employees, organization and the suppliers. When all the relations are balanced by the organization, then we can say that this sort of corporate governance is considered as good corporate governance practice. Now, the scope of corporate governance: preparation of companies' financial statements. Very important. Preparation of companies' financial statements. Because in various cases, it has been realized that organizations often manipulate their financial statements. They manipulated the figures in their balance sheet to raise capital from the share market. Now, it's a very common principle that shareholders are going to attract towards a company which is showing profits and more profit. Earlier, the company was showing a profit of say 10 crore rupees. This year, the company is showing profit of say 50 crore rupees. And next 3 years, the company is projecting 200 crores of profit. And everything is moving in the right direction because the balance sheet is showing like that. So if such balance sheets are seen by the shareholders, if they come to know that this is the company which is making profits for the last 2, 3, 4, 5 years, then these people get attracted towards that and they start purchasing the shares of that particular company. That is the normal principle. So protecting the interest of these shareholders, it is written in the rule related to corporate governance, that how the company's financial statements are to be prepared. In the coming lectures, we will be discussing the procedure of preparing the balance sheets also. Now, how it is to be prepared? So, it is the a very general answer will be that the organization is supposed to prepare its balance sheet. Nobody else is going to prepare the balance sheet of the organization. Organization A is there. So the accounts department of organization A will prepare the balance sheet, and that balance sheet will be shared with the government agencies as well as with the shareholders also. That was the earlier practice. Now there is a change in the practice. After so many scams, after so many cases, there is a change in preparation of companies' financial statements or balance sheets. And that is that yes, the company's accounts department, finance department is going to prepare that, but there is an independent authority which is going to verify whether that balance sheet is correct or not. So the company cannot release the balance sheet without the approval of an external audit agency. That external audit agency is going to verify, going to check every detail of the balance sheet, whether all the figures which are mentioned in the balance sheet are correct or not. So all the evidences, all the proofs will be checked by the external audit agency, and if it is okay, then the balance sheet will be sanctioned, and then only the balance sheet can be released to the shareholders. Otherwise, not. So that is the first, that is preparation of companies' financial statements. Next one, internal controls and independence of entities auditors. So now if the auditors are appointed by the government, by the company, that internal preparation will be done by the finance department of the balance sheet. Then the company has appointed some auditors, which are external auditors, but company has appointed. Please keep in mind, the company has appointed. That means for that auditing, the company is paying those auditors. So there are chances that these auditors can also manipulate the statements. Why? Because these are the auditors, although they are external auditors, but they are being paid by the company. So there are certain auditors which are appointed by the government who are not paid by the company. They are supposed to verify these statements which are prepared by the company account department or finance department, which are verified by the company appointed external auditors, and these are to be verified by the government appointed auditors also. So this is how the government is keeping a check that everything is going smoothly in the organization. Next one. Now here the things are very clear that if it is proved that the company was involved in manipulation of financial statements, then not only penalty will be imposed of the company, but the person who is responsible for that manipulation can be put behind bars also. Mr. Ramalinga Raju was not only penalized heavily, but he was sentenced to imprisonment also. And this is how the government is giving signals to the other organization that if you are not going to follow the transparent system of corporate governance, and if it is proved that you were involved in some sort of fraud, then not only financial penalty, but the responsible person can be put behind bars also. जेल भी उस व्यक्ति को हो सकती है. Next one. Review the compensation arrangement for chief executive officer and the senior executives. Now, corporate governance, it reviews the compensation arrangement of chief executive, that how much compensation is being paid to the CEO of the organization and other senior executives. Now here, it cannot be solely decided by the management of the organization, but this decision of paying the salary or incentive or other benefits to the senior executives of the company or the CEO of the company is to be approved by the government agency. That next year we are willing to give our CEO this much of salary and these much of benefits, and top executives will be paid like this. It is to be approved. So that is again the scope of corporate governance. Various agencies are there. Which are those agencies that we are going to discuss? Certain committees are formed under corporate governance. 5-6 committees are there which regulate the working of the organizations, and to make the working of these committees easy, the distribution of responsibility is given to these committees also. that certain committees will be looking after the audit part. The other committees under corporate governance, they will be looking after the compensation part of the highest employees at the company. The other committees take care that everything is transparent in the organization. So this way, 4, 5, 6 committees are have been constituted under corporate governance, that we are going to discuss in our coming lectures. So that again comes in the scope of the corporate governance. Next, the way in which individuals are nominated for the positions on the board. Very important. The way in which individuals are nominated for the positions on the board. Now, suppose Mr. A owns the organization. He is the owner of the organization. He has started the organization from scratch. And now his organization has flourished. Now he wants to nominate his family members to the board of directors of the company. Now, here there are certain rules which are to be followed. As I have just told you that there are certain committees which are formed. So one of the committee takes care of appointment of members or nomination of members at the board level, because board is considered as the topmost authority of the company, which takes the important decisions as well as the day-to-day decisions. So here it is not that the owner, Mr. A, who owns the company, can nominate all the members of his family on the board of his company, because he has to define the role of the members also, and the members should be qualified to fit into that role, then only they can be appointed. Here, as per his wish, he cannot say that as I own this company, I am the owner of this company, so it is up to me, I can appoint anyone to board of my company. It is not so. There is certain percentage in the constitution of the board that 25% members or 30% members or 50% members can be from the family, rest should be from the outside. There is a percentage fixed that these many members in the board should be expert in the field in which the firm is working. Now, if the firm is into plastic manufacturing, in the board there should be a percentage of expert who are expert in the field of plastic manufacturing, who are having experience of 10 years, 20 years, or maybe more than that in the field of plastic manufacturing. So they should be nominated in the board of that particular company. So here all the percentage is fixed, that although Mr. A owns that company, he cannot nominate all the members of the family on the board of the company A, because the percentage is fixed. How many family members can be nominated? How many members from the organization can be nominated on the board? How many outsiders can be nominated? How many experts can be nominated? So everything is fixed, and it is to be followed very strictly. If it is not followed, then the entire board can be de-recognized under corporate governance. The committees which we will be discussing the authority and role of those companies also. The companies are, the committees are so so powerful that they can close the entire company also if the company is not working as per the guidelines under corporate governance. So that we are going to discuss. So that is why it is included in the scope of corporate governance, the way in which individuals are nominated to the position of the board. Next one, the resources made available to the directors carrying out their duties. The resources that are made available. Resources means not only the financial resources here we are talking about, but the other resources that the directors, whether they are given chauffeur driven cars, whether company has provided them accommodation, how much the company is spending on the family of the directors. So everything is to be checked under corporate governance. So that is again under the scope of corporate governance. Next one, oversight and management of risk. Oversight means monitoring. The corporate governance or the various committees that we are going to discuss under corporate governance, their role, their responsibility is to monitor the working of the organizations under the corporate governance structures, whether they are working properly or not. If not, then notice can be issued to those organizations that it has been observed that the following rules are not taken care, are not implemented, are not adhered to by the organizations. If the organization is ignoring such type of notification or notices from the government authorities, then strict action can be taken against that particular organization. So that was the scope of corporate governance. Now, the role of corporate governance. First role, corporate governance ensures the efficient use of resources. Efficient use of resources. Why it was necessary for the government to give the responsibility to corporate governance committees, that you need to check whether the company is utilizing its resources efficiently or not. And the reason was the conclusion or the findings which were made available related to various cases. One of the case which we had in the last lecture itself discussed, the case related to Kingfisher Airlines or Mr. Vijay Mallya. There we had discussed how the loan which was sanctioned for expansion of the business activities of Kingfisher Airlines, how that loan was used or utilized in personal benefits by Mr. Vijay Mallya. How he was using that loan in organizing various parties, in purchasing palatial bungalows, in purchasing cars, and in other personal activities. And to stop these kind of practices, the first role of corporate governance is corporate governance ensures efficient use of resources. If you are getting the resources for the upliftment of your business, you should ensure that you are utilizing these resources for the business only and not for your personal use. अगर आप पर्सनल यूज के लिए यूज करने लग जाते हैं तो इट इज अगेंस्ट कॉर्पोरेट गवर्नेंस. नेक्स्ट वन, इट प्रोवाइड्स for choosing the best managers to administer scarce resources. When we will be discussing the constitution of the board, कि किसी भी कंपनी का, पब्लिक लिमिटेड कंपनी या प्राइवेट लिमिटेड कंपनी या फिर वन डायरेक्टर कंपनी, बहुत सारी टाइप्स हैं कंपनी के, दैट आल्सो वी आर गोइंग टू डिस्कस. तो जब भी किसी कंपनी का बोर्ड कॉन्स्टिट्यूट किया जाता है तो बोर्ड में कौन कौन मेंबर होने चाहिए, कौन ऐसे मेंबर एक्सपर्ट होने ही चाहिए जो ये एंश्योर करेंगे कि जो भी रिसोर्सेस कंपनी में यूज हो रही हैं वो रिसोर्सेस अच्छे से यूज हो. दैट इज द रोल ऑफ कॉर्पोरेट गवर्नेंस. नेक्स्ट वन, इट हेल्प्स मैनेजर्स टू remain focused on improving performance and making sure that they are replaced when they fail to do so. Now here there is distribution of role of the board of directors is different and the role of managers in the organization is different. Board of director is supposed to play a, say, role of monitoring the activities of the organization. So it is just monitoring, whereas the managers are supposed to carry out the day-to-day activity of the organization. So the board gives authority to the managers, that managers have to ensure that the organization keeps earning profit and their salary should be in relation with those profits. That if the organization is making profit, the salaries of the employees, including the managers, will be increased. If it is not, then there will be no increment. And if the managers are unable to make the organization profitable, then these managers should be replaced with new managers. It should not happen that one of the manager is a close relative of the CEO of the organization. Only because of that relation, he is appointed as manager in the organization. And for the last so many years, the person is not performing. Still, the person is getting increment, salary, and every benefit. So such type of practice should be stopped. And that is the responsibility of the corporate governance. That if such practices are taking place in the organization, these practices are to be stopped. And such people, such persons, such managers should be removed from the organization if they are not improving the profit of the organization. Next one. It pressurizes the organization to comply with laws, regulations, and expectations of the society. Very simple. हर ऑर्गेनाइजेशन के ऊपर एक प्रेशर रहता है कि अगर हमारा सिस्टम ट्रांसपेरेंट नहीं रहा, जो रूल्स है कॉर्पोरेट गवर्नेंस के अगर हमने फॉलो नहीं किए, तो हमारे ऊपर स्ट्रिक्ट एक्शन लिया जा सकता है, हेवी पेनल्टी इंपोज की जा सकती है, या हमारे किसी बोर्ड ऑफ डायरेक्टर या मैनेजर या जनरल मैनेजर को सजा भी हो सकती है। तो ये प्रेशर रहता है। इस प्रेशर की वजह से भी बहुत सारी ऑर्गेनाइजेशंस अपना सिस्टम ट्रांसपेरेंट करके रखती है। नेक्स्ट वन, it assists the supervisor in regulating the entire economic sector without partiality and nepotism. It assists the supervisor. यहां पर सुपरवाइजर कोई व्यक्ति नहीं है, यहां पर सुपरवाइजर कौन है? वो 6-7 कमेटीज, वो 5-6 कमेटी जो कॉर्पोरेट गवर्नेंस के अंडर अपॉइंट की जाती हैं, वो कमेटीज को यहां पर सुपरवाइजर कहा गया है। तो वो कमेटीज अपना काम अच्छे से कर सकें, इसके लिए कॉर्पोरेट गवर्नेंस इज इंपॉर्टेंट। अब वो कमेटीज अच्छे से काम करेंगी तो अपने आप ही पार्शियलिटी कम हो जाएगी और नेपोटिज्म भी कम होगा। अभी न्यूज में हम लोग बहुत सुनते हैं ये शब्द नेपोटिज्म। नेपोटिज्म नेपोटिज्म इज वेरी सिंपल, एवरीवन of us is aware of that the family members, the children of the owner of the organization, if they are not well qualified, still on the basis of the relationship that he is the elder son of the owner of the organization, he should be appointed at the board of directors. अगर ऐसा होता है तो नेपोटिज्म है। पर जो कॉर्पोरेट गवर्नेंस का मैकेनिज्म है, दैट ट्राइज टू एंश्योर दैट दिस टाइप ऑफ नेपोटिज्म इज मिनिमाइज्ड। खत्म करना तो बहुत मुश्किल है, पर कम से कम हो, दैट इट कैन एंश्योर। So far, if you have not understood, please ask your query. We will sort out that query and then we will move forward. अगर अभी तक आपको कुछ समझ में नहीं आया है तो प्लीज पूछ लीजिए। I hope that my voice is clear to all.
Yes, sir.
Yes, sir.
Okay, thank you. Thank you. So, role of corporate governance. It increases the shareholders' value, which attracts more investors. Thus, corporate governance ensure easy access to capital. अब शेयर होल्डर को भी पता है कि एक एक्सटर्नल अथॉरिटी है, एक रेगुलेटरी बॉडी है, दैट विल मेक श्योर दैट द माल प्रैक्टिसेस विल नॉट बी there in the working of an organization. Whatever information the organization is releasing, that information is true, as that information is verified not only by the government, the company officials, but also by the government officials or external expert agencies. So it increases the shareholders value. घोटाला या स्कैम के चांसेस कम हो जाते हैं अगर सब कुछ सही रहेगा तो। So that is how it increases the shareholders value and attracts more investors. Next one, as corporate governance leads to higher consumer satisfaction, it helps in increasing the market share and sales. It also reduces advertising and promotional costs. सब कुछ ट्रांसपेरेंट है, सब कुछ अच्छा है, सब कुछ एज पर रूल है, कोई वहां पे मैनिपुलेशन नहीं हो रहा है, तो इसमें क्या होगा कि कंपनी को ज्यादा एडवर्टाइजमेंट पर अपने खर्च करने की जरूरत नहीं, कि वी आर इनटू अ वेरी ट्रांसपेरेंट प्रैक्टिसेस, एवरीथिंग क्लियर, everything is transparent, all the stakeholder interests are uphold by the company. So if such practices are implemented by the company, there is no need for the company to spend extra amount or extra money on advertising the company. Next one, employees are more satisfied in the organization that follow corporate governance policies. Very simple. We have just discussed that if a person is included in the organization as a manager, appointed as a manager in the organization just because of his relation to the highest official of the organization, then there will be unrest in the organization. People will start thinking, employees will start thinking that no matter how hard we work, we are not going to be promoted. Why? Because promotion is based on the closeness to the highest officials of the organizations. Here, the employee satisfaction will be less. But if the organization is following the principles of corporate governance, that means the highest manager appointed by the organization, if that manager is also not performing, if the general manager is not performing for the last 1, 2, 3, 4 years, then that general manager should also be removed from the position, removed from the organization. It should not happen that as he is the highest authority in the organization, he cannot be removed. Everyone from the organization can be removed if that person is not performing. So that thing, if it is followed in the organization, last one, corporate governance reduces procurement and inventory cost. When everything is transparent, everything is as per the rules, then automatically the procurement and inventory cost is reduced. Word of mouth, हम लोग बोलते हैं ना, word of mouth is still considered as the best advertisement. ये सबसे अच्छा एडवर्टाइजमेंट क्या है? To word of mouth, and it is relevant today also. In today's world of business analytics, when experts are appointed by the organization for reducing the procurement and inventory cost, or just to find out how we can improve our brand value, or how we can retain our customers. Social media marketing is there, digital marketing is there, the other types of marketing or advertisements are there. So earlier, word of mouth was considered as the best marketing strategy, advertising strategy, and now also in all these systems also, still it is considered as one of the best marketing or advertisement strategy with no expenditure. सोशल मीडिया मार्केटिंग करनी है, बहुत पैसा लगता है. डिजिटल मार्केटिंग करनी है, कंपनी को बहुत स्पेंड करना है. वर्ड ऑफ माउथ के लिए कंपनी को स्पेंड और रिजल्ट्स सबसे अच्छे. क्यों आजकल कंपनियां बहुत ज्यादा सोशल एक्टिविटीज में इन्वॉल्व है? बड़ी बड़ी कंपनीज सीएसआर, क्योंकि लॉ है एक, फर्स्ट पॉइंट कि एक लॉ है और लॉ के हिसाब से आपको अपना 5% जो भी फिक्स है परसेंटेज, वो परसेंटेज आपको सीएसआर मतलब कॉर्पोरेट सोशल रिस्पॉन्सिबिलिटी, उसके अंडर आपको यूटिलाइजेशन उतने अमाउंट का दिखाना है, दैट इज एज पर लॉ। दूसरा एक कारण है कि अगर आप एंड वैल्यू बढ़ाना चाहते हैं तो आपको सोसाइटी के लिए काम करना पड़ेगा, बिकॉज हु हैज प्रॉफिटेबल पीपल हु आर लिविंग इन दी, जो आपके प्रोडक्ट को यूज करते हैं, लोग आपके प्रोडक्ट को यूज करते हैं। So, आप सोसाइटी के लिए कुछ लोगों के दिमाग में जो आपकी इमेज है वो अच्छी अच्छी और अच्छी होती है। अब ब्रांड वैल्यू अगर हम बोलेंगे तो अभी जैसे टाटा ग्रुप ऑफ कंपनीज 150 उनका ब्रांड वैल्यू क्यों बढ़ता है, क्यों बहुत अच्छा है? क्योंकि हम लोग पेपर्स में पढ़ते हैं कि हाउ मच अमाउंट दे आर स्पेंडिंग फॉर lives of the poor people, how they are converting the life of downtrodden people, how they are investing money in giving education to the uneducated. तो ये सारे कंपनी क्या होता है, अपने आप लोगों के, और यहां से फिर कि ठीक है ये कंपनी इज बेस्ट कंपनी। एक अनपढ़ व्यक्ति है, उसे कुछ पता नहीं है कि कंपनी के प्रैक्टिसेस क्या है, कंपनी क्या करती है, उसका बैलेंस शीट क्या है, कुछ नहीं पता उसे। बहुत ही गरीब व्यक्ति है वो, झोपड़पट्टी में रहता है, उसको सिर्फ इतना पता है कि इस कंपनी ने हमारे यहाँ पे टॉयलेट्स बांधे हैं जिससे कि हमारे एक फ्री ऑफ कॉस्ट मिली है। मतलब क्या, उसके दिमाग में एक बात छप गई कि जो भी प्रोडक्ट इस कंपनी का होगा वो शायद सबसे अच्छा प्रोडक्ट होगा। तो जब भी वो व्यक्ति कोई प्रोडक्ट खरीदेगा, जब भी उसका रिलेटिव कोई वो प्रोडक्ट खरीदेगा, तो वो हमेशा इसी कंपनी को प्रमोट करेगा, एंड दैट इज कॉल्ड एज वर्ड ऑफ माउथ पब्लिसिटी। दिस इज हाउ कॉर्पोरेट गवर्नमेंट एंड इन्वेंटरी कॉस्ट। एलिमेंट्स ऑफ गुड कॉर्पोरेट गवर्नेंस, दैट slide, come prepared for these elements of corporate governance. Course entire subject is based on these elements of good corporate governance. These are rule of law, responsiveness, consensus oriented, equity and inclusiveness, effectiveness and efficiency, accountability and participation. So we will be discussing in our next lecture on these elements of good corporate governance. So thank you everyone for being present in today's session. Thank you.
Sir, I have one question.
Yes.
Sir, when will we get e-magazines?
Hello.
Yes. Hello.
Yes, Omkar.
Sir, when will we get e-magazines to read?
Hello.
Hello, sir. Can you hear me? Hello.
हाँ, yes, Omkar.
सर वो e-magazines कब मिलेंगे सर हमें पढ़ने के लिए? हेलो.
नहीं मिले ना, वेरी गुड, थैंक यू। आज आप लोग अपना शाम को मेल चेक करो।
ओके सर.
हेलो।
यस सर.
हाँ, आज आप लोग अपना मेल चेक करो, यू विल रिसीव दोज मैगजीन्स।
ओके सर,
ठीक है, थैंक यू।
थैंक यू सर।
Thank you, sir.